Good morning. This is my roundup for Tuesday the 17th of February. So when you want to start trading the markets today, I guess the first protocol is to do some quality research. So when I say quality, you need to go for some of the more mainstream news sources. So Bloomberg's always good, but remember, this is all massively lagging, okay? So we've got the Dow Jones, S&P up, 8.51 points, FTSE down, etc., etc. So what you need to do is just look through the headlines, understand what people are going to be looking at today to base their trading decisions on, and obviously it's all about Greece, okay? So Greece are playing hardball. They got nothing to lose. It's like that old saying that, if you owe the bank £1 million, they owe you. If, you owe the bank 20 million quid, you own the bank type thing. So Greece have got nowhere to go, and the EU have been absolutely monumental in being terrible at making key decisions like this. So I don't really think anything's going to change. So really, just looking at the rest of the US markets closed yesterday up after the holiday, and the rest of the news is all about Greece, Putin, nothing good. Okay, so once we've kind of got that, we need to go back to our charts really and see what's happening from a technical standpoint. My view of the markets is they move 80% of the time technically, 20% of the time due to fundamental information. So if you've read all that information, you've opened up your charts, and you've started trading now, you're probably going to lose money because you'll have gone short into the break above this lower level. We have the DAX here, very, very sensitive to that European fundamental news. So the market goes down and then it quickly goes back up. Gold, is remaining on its lows, which is unusual. You think gold in times of uncertainty would be, heading towards the highs, but we can see already the markets have opened up and opened up strong, and that's in order to squeeze all the people that have just got up out. So that's why I never really recommend trading when you're an intraday trader. The market opens. Don't start really trading until about quarter to 10. And 10 o'clock onwards, because you get all the institutions, all the big boys getting in the morning and squeezing out. So that's a perfect example. Nothing's really changed, but because the markets were fairly strong overnight, and then we saw, the Greece haven't made a decision yet or haven't played ball. It's still 50-50, isn't it? I mean, Greece have got nothing to lose, so will they play ball, will they not? I don't think so personally. I don't really care, to be honest. I'm not interested about being right, I'm interested about making money. So what we can see is in the morning, we're going to see a short squeeze. So we've got the 50% of this big down move that we saw right on the open, just pre-open. And then we've got how the market's trading now. Remember, on the hourly charts here, that's the best way to look. So what you're expecting to see is the markets to push up in the morning. And if they don't make new highs and close above this daily area of support resistance here at 10,852, then the market's going to continue to go down unless there's some new news. Really, we've retraced all this up move that was really kind of all the rumours and rhetoric about Greece playing ball and Greece being able to come to an agreement with the EU. Then we kind of topped out, again above 11,000, all-time new highs. Then the market's gradually dip below this 50% technical fib here on the hourly and then come down. So what I'm expecting is a bit of a short squeeze, and then if we don't hear anything good out of the EU and Greece, then it's going to continue to come down. I mean, we've still got all the problems with the Ukraine, all the problems, again, geopolitical with Syria. Nothing's really sorted. I mean, we're kind of election in the UK, so election is kind of taking all the focus off what's happening in the UK. It's all nonsense basically that's been spouted about different things to try and get voters to to choose a political party. But in the eurozone, it's still mainly focused on Greece. So the DAX got some key levels on the downside. Again, you've done our Fibonacci, so there's a big break below the 423 here, and our 50% we're below the hourly fib. So that means we're very, very bearish once we're below that 10,804 spot 69. So really, there's nothing major on the charts until 10,009,540, but you can use your fibs that we've just drawn on that recent hourly candle to say that there's going to be good support probably at 10.07.15, and then probably below that at 10.06.31. I don't think we'll get a great deal lower than that. Gold, got to be an interesting one. I mean, if you just look on the monthly chart on gold, I'll show you exactly why I still remain bearish on gold. Up move really kind of starts from here to here. So your 50% is here. Fits it pretty much perfectly. So the longer we hold below 13.10, the more likely we are to get to $1,000, and that's really where I think gold should be more priced, a lot more fairly. If we're going to get back to the 1700s, $2,000 an ounce, then it would have happened by now. There's much more fear in the world than there ever was back here. The uncertainty, with Russia, with Greece, with the eurozone, with life in general. So if gold was going to get back up, it'd done it by now. So for me, it's all about picking these down moves, breaking this lower level here, this lower fib at 116,744. Once you get below that, it's $1,000 all day long. Okay, so even put your stop. Trade here. To risk, quite a lot, 1,500 ticks, but you're gonna make 3,000, when it gets down to 1,000 or so. So it's a difficult one. I mean, trading longer term off the monthly charts is very, very difficult. And we're intraday traders. We're looking to use our margin. We're looking to use our ability to get into many markets to profit, not to be right. Trading is about being right at the right time and making money. It's not about having the right opinion. So just scroll through to the weekly charts, lower high, lower high. Gold for me is looking massively bearish. Daily, the same. We've just not failed to get back to that 50% yet again. And then really for me, probably some consolidation around here, then these lows, and then all the way down to $1,000. So again, the ability to have your time frames set and your analysis, it's absolutely pivotal. We've got the potential intraday to get down to 1 to 16, and below that 1 to 15.33. So again, we know in gold that we're going to continue this 1, 2, 3, 4 hours of selling. Potentially we've got another 70 ticks on the downside. On the upside, 72 ticks back to the 50% if these lower fibs act as support. So the ability of having a system like this, iView charts, that I've created, is that you can analyze any product on any time frame instantly, and you just need to be able to do that, otherwise you're not going to survive in the market. So again, same scenario in the S&P. The S&P is driving back from these lower bowls, and it's just getting a short squeeze, getting all the people that are short into that announcement, into that troubles with Greece, out of the market before it goes down. Exactly the same in the euro dollar. So go to the euro dollar on the hourlies. We're trying to get back to the 50%, aren't we? Just here about 1.13940. So all that bad news that we would have thought, well, the euro would continue to crash down. If Greece aren't going to play ball, then we've seen this downward selling action. Market consolidates, and then get down to these really juicy lower levels at 1.12815 and parity. That's what everyone's saying. 1.0. All the so-called experts. And yeah, I mean that's realistic where the euro is going to go. I don't really think whatever happens with Greece over the next 2 weeks, 3 weeks, 6 weeks, 6 months. It's just a road to inevitability. They're never going to pay the debt back, and the austerity measures that everyone's fighting against and elected the political powers in are just going to be too strong. And all this game logic and all this kind of stuff. This guy that's coming from Greece, is an academic. Academics don't make great politicians. They don't make great traders. They just stand there and tell the facts, and they're saying that. They want to pay the debt back. They want to do it structured. They want to do it fairly. Well, the world's not fair. You've borrowed the money. Now you've got to pay it back. If you don't want to pay the money back, leave the eurozone. Greece isn't particularly bothered. Greece people aren't particularly bothered, and the German people aren't particularly bothered. So that means certainly the UK people are not particularly bothered. The eurozone's not been working for a long time, and I think everyone benefits if actually the whole system just has a big reboot and restart, because nobody knows where they are. Nobody knows how much real assets the bank has of European debt and personal debt. And to be honest, I'm personally just not interested. I just want it to be sorted out. So if Greece leave, fine. The Eurozone's not going to be massively weaker for Greece leaving. Obviously, the risk of contagion, what's going to happen to Spain, Portugal, etc., etc. These things are inevitable. It's not down to Greece to sort that out, and it's certainly not down to the UK to sort that out. It's down to Mario Draghi and the Eurozone. They've had enough money, enough time, and they've been last to the playbook and everything. Quantitative easing has just been brought in now. Negative deposit rates. It's been a highway to hell since they started, and Mario Draghi is the man to blame. So really, in the euro, I'd expect a little bit of relief rally, maybe get as high as 1.13950, but then we're back to these lower fib levels, down at 113.328. And then 1.12778 is realistically where we're going to break down, and then below that we've got the lower fibs. And if you just flick onto the daily time frame, we can see that the market's consolidating towards the bottom, but we're at all-time, well, not all-time, but at significant lows from previous points in the past. So when we come down and break these lower levels here, there's not a great deal of support at all. We'd have to go to the monthly to figure out, where that support would be, and it's really back down to here, just above, parity at 1.04854, and then really just drawing a straight line to support freehand. That looks like a nice level here. So again, it's all the way down to 1.0. I think that's really my kind of main focus points. Again, I'm waiting for this first hourly candle close, maybe start trading about 10 o'clock, trying to get short the major indices if no news comes out. Gold might be nice for a little bounce, but again, I'm still very, very negative gold in the longer term, so I'd be selling any major highs. SMI, one to stay out of. It's just quite a difficult one to trade. It doesn't really follow the US, German, and UK markets as well. FTSE I still think is going to get to 7,000, so still a lot of value on the low side. The DAX, S&P have all hit technical, psychological, fundamental levels and held above, so there's no reason really why the FTSE shouldn't hit 7,000. So my main view on the pound versus the dollar has changed. 7 months of selling we've seen, yeah, and then seen an inevitable green bounce. But really, the US have really changed tack pretty quickly, haven't they? From talking about interest rates last quarter 2015, early 2016. Now they're talking, second quarter 2015. So are they going to beat the UK? We're going to see some consolidation, and then instead of the pound strengthening back to 1.64, we're going to see the pound weaken further still and get down below 1.43. And even lower. If the US are going to move quicker on rates, then that demand for the US dollar is going to continue, and we're going to see strength against the Japanese yen and more strength against the euro. And again, interest rates are going to be forefront now. We've understood that growth is fragile, but that's the world we live in right now. We don't have any other choice to understand that we've done the quantitative easing, we've done all the measures we can, and if the growth continues from what we've done, then fine. If it doesn't, then it's all about getting back to those all important inflation figures and when interest rates are going to rise. So again, seeing that strength come back in. I haven't heard anything over the news wires, and again, the economic data, something to focus on today. Just get something simple up like FX Street. They're always pretty good. So this might be consumer confidence in the UK. We've got that in 8 minutes time, so expected 1.3. So consumer confidence could easily send up, the pound and the FTSE. Then after that, really got the German ZEW, expected 55 today. One to keep an eye on. Germany bankrolls the eurozone, so anything strong out of Germany is positive. And after that, we've got nothing really of interest. Maybe some Canadian figures. They might be worth having a little side eye on just because the Canadian have been in the news for the interest rates. And apart from that, really, we could have something at 5 o'clock from Switzerland. They've been very volatile, obviously removing their peg from the euro, and we've seen a big crash in their stock market, but then a huge bounce. So yeah, could be interesting. But lots of fundamentals driving the news right now. But again, it all goes back to your charts and looking at that 80%. So the 80% of charts is absolutely pivotal, understanding what could happen. So in my respect, I'd probably sell here in the S&P as a little bounce at a 209280. So that'd just be a quick morning little scalp, just try and nick 10-15 ticks of quick bounce, because we've seen that big sell-off and then that big reversal trying to get this squeeze out. So I still think there's some value selling the S&P high, especially after having that pretty much that day off yesterday. Alright guys, that's iView charts. It's only available to buy in this form on MT4 for literally the next 2 weeks. So if you want it, yeah, you can. I'm doing a special offer. You can have it for 2 years for $300. So just go to iViewCharts/TradingMo or Google or contact me. I'm not a difficult man to find, and you can buy it. After that, it won't be for sale, and you can't have it. Simple as that. So if you want this 80% technical edge to give you an idea of how to trade the markets, any market and any time frame, then there it goes. All right, guys. Well, hope you enjoyed that. I'm going to try and do these a lot more regularly and give you guys an idea of what I'm looking at. So good luck with your trading, and feel free to contact me. Cheers.